Hello and welcome to your FAL Crypto Minute, your number one source for educational crypto content in under around 10 minutes. On today's show, we're going to be going over Coinbase focused on staking, and the SEC is sending out another cease and desist letter. All that and more on today's FAL Crypto Minute. But before we get into the news stories of the day, let's go over the top 10 cryptos. At number 1, we have Bitcoin at $23,975, up 3.40%. Number 2, we have Ethereum at $1,856, up 8.47%. At number 3, we have USDT. At number 4, we have USDC. And at number 5, we have BNB at $328, up 0.80%. At number 6 is XRP at 37 cents, up 2.87%. At number 7 is Cardano at 53 cents, up 3.64%. And at number 8, we have Binance USD. At number 9 is Solana at $42, up 3.92%. And at number 10, we have Polkadot at $9, up 6.82%. And that was your top 10 cryptos for the day. Moving into our first story, Coinbase is focused on staking. With multiple lawsuits and an SEC probe looking into Coinbase, one would think the main concern for CEO Brian Armstrong would be turning profit, but it's not. It's staking. Any given quarter, it could be up or down, he said of the crypto market on Coinbase's most recent earnings call. It's important to distinguish between what is in our control and what's out of our control. The crypto winter has led to lower interest from institutional and retail investors, with trading on Coinbase falling 50% compared to the same quarter last year, slumping from $462 billion to $217 billion. On the same call, Coinbase CFO Alicia Haas claimed that when faced with the slashing in prices, investors tend to shift from traders to holders. But she did note that the monthly number of users is up 200,000 compared to the same quarter last year. In the shareholder letter, Coinbase brought up how it retains users through the ability to stake assets. As a result of our core retail customer trading less, our monthly transacting user has trended more towards non-investing activities, notably staking. Popular coins like Bitcoin are proof of work, meaning it's generated by using machines competing to solve complex problems to mine coins and digital assets. Proof of stake works differently by choosing from a pool of people holding the proof of stake coin. A proof of stake validator node can be added to the pool by staking coins for a certain period of time, giving proof of stake validators a source of income without needing powerful mining hardware. It's also referred to as a consensus mechanism that rewards users for validating on the blockchain. The letter mentions how Coinbase sees its staking feature as an early win. It is considered one of its most prioritized products, with the number one goal being to become the number one staking company in the world. Ethereum, Solana, Cardano, Algorand, Cosmos, and Tezos are all assets that you can stake on Coinbase. During this year's Q2 earnings report, Coinbase said that up to 67% of its monthly users were engaged in non-investing products offered by the company. It did not specify how much of the 67% is made up from staking, but the company stated that across all assets we support, Coinbase saw higher native units staked in Q2 compared to Q1. The next couple of months are being targeted as the date for the Ethereum merger, which will see the number 2 cryptocurrency in the world move from a proof-of-stake algorithm to a proof-of-stake model. Coinbase is emphasizing staking as a part of its business model with this in mind. In early August, we began offering Ethereum staking for institutional clients for the first time, the letter to shareholders states. We'll continue to add more assets for staking for both our retail and institutional clients going forward. Moving into our next story, the SEC is sending out 2 more cease and desists. The SEC has sent a cease and desist letter to Bloom Protocol, asking it to register its tokens as securities or risk up to $31 million in fines. The SEC issued a cease and desist order to the company on Tuesday, accusing it of offering unregistered securities, and in the 18-page letter sent on August 9th, the SEC accused Bloom of violating the Securities Act by offering its BLT tokens through an initial coin offering between November 14, 2017 and January 2nd, 2018. The SEC said the crypto startup raised $30.9 million from 7,358 investors worldwide. It continued that the firm had to refund those who bought its BLT tokens before January 2nd, 2018. A failure to do this meant the firm would have to pay all the fines to the SEC. They also noted that the Bloom was quick to take remedial actions like agreeing to register BLT as securities, retaining an auditor to start the audit of its entities, and hiring full-time employees to fast-track the auditing and compliance necessary before registration. Bloom Protocol started in 2017, intending to revolutionize the credit scoring industry using blockchain technology. Also, Bloom describes itself as a blockchain-powered solution for credit scoring that aims to reduce the risk of identifying theft. It claimed its systems minimize fraud prevention and the cost of customer onboarding. According to the SEC, BLT qualifies as an unregistered securities as it was not registered with the commission and did not meet the requirements for exemptions such as registration. Bloom allegedly told prospective investors its limited presale was oversubscribed, and it raised a hard cap of $50 million total. The average investment during the presale was $340,000, and the average during the public sale was $2,000. Regulators found, which when calculated didn't add up to the advertised cap. Bloom is expected to register BLT as a class of securities within the next 270 days and inform investors about potential claims to recover their money within the next 60. It has been ordered to fulfill all payments to investors within 3 months of the claims form submission deadline. Following the news, BLT, which peaked at $1.51 in May 2018, dropped 36.4% in the last 24 hours. It is now trading at around 0.0168. At its peak, BLT's market capitalization was nearly $60 million. However, that figure is now less than $500,000. This is another telltale sign of the early times present within these markets. All right. Thank you for listening to the FAL Crypto Podcast. Thank you guys for tuning in. You can follow me on Twitter over at crypto_lahada. That's crypto_LAJARA. You can follow the official FAL Crypto Consultant Twitter over at CryptoFAL. That's crypto FAL. Follow the one-stop shop for your cryptocurrency needs and from answering questions for new people. For bigger institutional clients, we're there for you. Regardless if you're a small business or bank, we'll make sure to take a tailored approach to all your needs. Our team houses specialists in all areas of cryptocurrency, from mining, trading, creating NFTs, DAO, staking, and lending questions to general market research. Go to cryptofal.com to learn more.